We're going to check in with Todd Horwitz with Bubba Trading here in just a moment. The corn market today has been down by 1 3/4 to about 2 3/4 cents. We've come off of that just a little bit. The May is down 1 right now at 3.30 3/4. The December new crop is down 2 at 3.48 3/4. Now the soybeans were as much as 10 cents lower on the May contract. The July down 9 3/4 off of the low of 8.58. And new crop November is down 6 pennies at 8.69 1/2. Let's go to the wheat market in Chicago. And there's where we are down a penny right now on the July Chicago wheat. Kansas City wheat has been a little bit of a different story today. The KC wheat for July now 2 pennies higher at 5.01 even. And Todd Horwitz is here with us. Todd, it's good to talk to you today. Thank you very much for joining us on this Monday. How do you feel about the grains at this point?
Good morning, John. I'm pretty depressed about the entire action. You know, the whole lack of liquidity in markets in general is problematic. Certainly, wheat and soybeans were much higher overnight, and they've given way, and obviously beans are down. You know, they've been down as much as 12 or 13, you know, down 10 cents now. You know, again, I think the bottoms are in, but we haven't had that aggressive buying come in yet to start to take over. And of course, the more the economy slows, the more stocks we're building, the more inventory we have, the more supply. It's harder to get these prices to move. Now, they will move, and I do think the lows are in, but it's extremely frustrating, especially if you're a farmer producing, holding on to these things right now.
Now, you said something there I want to key in and ask you about. You said something that possibly the lows are in. Of course, you know, anything can happen from here forward. But so does that mean that at this point we can look at a chart, we can look at some of these technical lines in the sand, if you will, and maybe make some decisions going forward from here?
You can. Again, the big problem here, John, is that we have a markets that are not liquid. And I'm not just talking about, I'm talking about all markets right now are not all that liquid. Okay, you've got, you know, too much action going on without enough people, you know, making markets on both sides of it. So you've got markets that will move much faster and make much bigger moves in a shorter period of time because of that. My concern is if the banks start to step in and get a little bit concerned and they force liquidation, that would cause a problem. But overall, it's showing that at least we're holding these low levels and these support levels, which means that once we start to see some buyers come in, it can trigger some very healthy buying. But as we sit in these markets today, they're not very comfortable. Now, again, I do believe the lows are in. However, that doesn't mean that we won't sit here for a while and hover along the bottom line. But yes, if you looked at a chart, you would say these levels should hold and we should be in pretty good shape.
Todd, I know that you and I talk about crude oil quite often. And what about this action that we're seeing in crude oil today, now that we hear that maybe there may be a little bit of a reduction in some of this production?
Well, if you take a look at crude, now crude is really interesting today because if you look at the May contract, which the last I looked was about 35 cents or whatever it was, but if you go out and look at July, that's up $1.50. If you go out and look at September, it's up $1.90. So it's telling you that we're going higher now. And again, we've said that here before, that this formation is extremely bullish. And with the outside action, with the potential cut in supply, it could create, obviously, these higher prices. Now, again, be very careful here because once the news does come out, we might see a pullback. You know, the problems are not over. The oversupply is not over. So I would not be surprised to see a pullback from here. But certainly, the formation is much more bullish. And hopefully, everybody took our advice and actually hedged those oil when they're down at really cheap prices.
Todd, great point. And you had touched on something earlier about some of the pressure. We've seen a lot of that over in the livestock market today. So we'll come back and talk to you about that next here on the Market Area. When it comes to the livestock futures numbers, there's not a whole lot to talk about at this point because we are locked limit lower. Live cattle is where we go here first. And, yep, $3 lower all the way across the board. And on the feeder cattle side of this trade, $4.50 is our daily limit. We are locked there as well. We started out locked the day limit lower in the hogs, and this is a new expanded limit. May and June are still $3.75 limit lower. The April is the only exception. It's up 138 at 44.17. Todd, You were talking earlier about just all of the pressure in these markets. Look what's happening over here in the livestock trade today. Your thoughts?
Well, again, this ties right into, John, what's going on, right? We have no restaurants are open, basically. We've got no business going on. You've now got Smithfields that just shut down their big plant in South Dakota, which is, again, all the things add up eventually that the supply is growing. And we've got nowhere to go with the supply, and that is going to create some pressure. Now, again, obviously, I would love to be a buyer here as a trader. I'm not buying yet because, again, I'm not going to chase into a market that's going down here. But I certainly think that we're very close. But, again, with the economy struggling, with everything that's going on, there isn't an expanded amount of hope saying, hey, we're going to get, these things going back. And, of course, with more people spending time at home and not working, they're spending less for protein and things like that. So, again, it's a problem that will resolve. The question is when and how much pressure do we have to take before we get there.
Dow Jones Industrial Average here today, Todd. We saw about a 500-point drop. We've come off of that. Now we're a little over 400 points lower. So is this Dow reacting the way you think it would at this point of what we know about coronavirus and where we stand?
Well, I think the Dow is extremely overvalued. I think last week's big rally was really laughable. However, last night when the markets opened, they opened up about 200 points higher before actually going down limit at one point, and now they're just lower. But the Nasdaq has already turned around, is actually higher on the day. There's still a demand to get into these markets because at the end of the day, with the Federal Reserve fooling around in these markets and continuing to try to infuse capital, they are putting you in only one place to buy right now, which is equities. Where else can you go if you want to invest your money? There is one place, unless it's your mattress. And so people are just kind of blindly buying, playing the statistics of the market. And of course, this will end up probably pretty ugly because I would expect to see these markets make new lows before this rally continues. And that's one of the issues. But however, today, you've already seen the Nasdaq make a dramatic turn. I wouldn't be surprised if the others followed later.
All right, Todd, thank you very much. We'll talk to you again soon. Stay healthy. And Christina, we don't have any USDA numbers yet as far as the pork or the beef cutouts. As soon as those are available, we'll pass those along. Back to you.